Hey, this is Arthur Hill, Chief Technical Strategist at TrendInvestorPro.com. You are tuned into our YouTube channel for our weekly video analysis. If you like this video, please give us a thumbs up and consider subscribing. So we had a long-term moving average crossover signal in gold. It crossed above its 200-day simple moving average. Earlier this month, we had it cross above the 200-day EMA. And so this is part one of a two-part series. And in this first part, we're going to put the 200-day crossovers to the test, the SMA and the EMA. I'm going to show you how to improve results with a little bit of smoothing, show you how to chart the difference between two SMAs, and give you a preview of part two, which uses the trend composite for signals and goes into some more detailed chart analysis. So part one is free, and part two is available to subscribers of TrendInvestorPro.com. So I am working off of Stock Charts ACP, and here I've got gold. This is just a close-only chart for the gold SPDR, and we can see it making a big move and then coming down. This is the 200-day SMA in red, the 200-day EMA in green. And you can see we crossed below these two moving averages there in February, and then we crossed above them again here in May. And these are longer-term trend-oriented signals, and this is more like a trend-following strategy if you're following these moving averages. And so you can expect a lot of whipsaws, and the idea is that one good trend pays for them all. So what we're going to do is we're going to backtest these signals, the signals when you cross above and below the 200-day SMA and EMA. You're going to buy when you cross above, and you're going to sell when you cross below. And by doing that, it doesn't mean we're going to get the exact future told to us, but it does help us set expectations going forward. It gives us an idea of how many whipsaws can we expect, or what's the chance of getting a whipsaw? What percentage of the signals actually result in positive returns? What is the average gain on a signal? What is the average loss? And then what is the profit factor? And the profit factor is an important metric. It basically is the total dollars from the profits divided by the total dollars from the losses. So it's your ex post reward to risk ratio. So when the profit factor is above 2, which is what you want, that means your profits are more than twice your losses. And that's kind of what we're after. So let's look at some test results here. So now I'm moving over to Amy Broker, and what I've done is I've run the back test for crosses above and below the 200-day moving average, and I just want to show you some signals here with the red and the green arrows. The green arrows are the buy signals, the red are the sell signals, and this is a long-only test. In case you're wondering, you add short positions, and the test does not work near as good. This works best for long only. And you can see here, when you're using moving averages, you're going to get whipsaws. You're going to get whipsaws with all trend following strategies. And the idea is one good trend pays for them all, as I said. And you can see here, it would have been very frustrating. You would have had whipsaws in 2017 into 2018 and into 2019. You would have given up, and then you would have gotten the two big signals here and caught this bull run. So you had to go through quite a few whipsaws before you got this big trend. And that's kind of the way gold trades. A lot of dullness, and then all of a sudden it catches fire and you get a big trend. So GLD started trading in the middle of 2005. So I'm running this test from January 2006 until May 20th of 2021. Signals on the close, buy, sell on the next open. No commissions or slippage. This is just to give us an idea of what's going on. And you can see if you're buying and selling a cross close above and below the 200-day SMA, you have a win percent of 30%, much less than 50%, and that's because of the whipsaws. But the average gain's pretty good, around 10.5%. Average loss is around 1.5%, and profit factor is above 2. And then we look at the EMA, we can see it has a higher win percent, but the average gain is much lower, 7.6%, and the profit factor is a little bit higher than the SMA profit factor. So overall, I'd give this a push. They're pretty much equal. Now we can reduce these whipsaws by simply using a 5-period moving average instead of the closing price. So you can see here we got some whipsaws there in January, and then we got the 5-day going below the 200-day. In other words, we smoothed the closing price with a 5-day simple moving average. And then you can chart that using the TrendInvestorPro plugin. And this is percent above moving average. It shows the percentage difference between the 5-day SMA and the 200-day SMA. So it's green when the 5 days above and red when below. And you're still going to get whipsaws. You're not going to remove whipsaws from the equation ever. It's just part of the game. And so let's see how this tests for the EMA and SMA if we use a 5-day moving average to smooth out the close. So right away, we can see there are a lot fewer signals on both, about half as many signals. So you would have been trading a lot less active. The winning percentage went down below 30%, so not a very high winning percentage. But look at the average gain. The average gain went above 21%. So by adding that smoothing, you were able to increase your average gain, and the average loss wasn't that much bigger. So it's still around 2 to 2.5% for the average loss. And then we look at the profit factor. For the buy-sell cross, when the 5 crosses above the 200-day SMA, you got a profit factor above 3. So given that high profit factor, I would say that this is probably the better of the two strategies. So as noted, that this indicator here, the percentage above the moving average, is available as a plugin, the TrendInvestorPro Indicator Edge plugin. And if you click over to the upper left, there's where you can access the indicators down there at the bottom if you have the plugin. And there are a lot of indicators there that will help you with your trading, trend identification, and signals. And the one I'm going to talk about in the next video is going to be the trend composite, which aggregates 5 signals from 5 trend following indicators. And it also triggered bullish. You can see it's different than this moving average crossover. And I'm going to put it to the test, and I'm going to analyze the long-term charts for gold and silver. So here's the main analysis page at TrendInvestorPro.com. And in addition to this video on the gold and silver trend composite indicator and chart analysis, there's a lot more to offer here at Trend Investor Pro. You can see here that I did a couple videos this past week on how to trade the falling wedge with some setups that were successful and some that were failures, and also how to trade the swing within the bigger pattern. And we had a lot of examples with that this week when we look at some of the tech-related ETFs, because we had some bigger triangles taking shape, and we have a downswing that was reversed with the bounce that we saw in the technology-related ETFs over the last 2 to 3 days. So if you'd like to know more about TrendInvestorPro.com, you can click on the link in the description below. If you like this video, please give us a thumbs up and consider subscribing. Thanks again for tuning in, and I'll talk to you again next week. Have a great day.